You may have heard enough people talk about recessions that this is not unusual. Every 4 5 years we have a problem, every 10 years we have a recessionary condition. This particular season is a bit different. First of all, US, which has enjoyed the reserve currency status for decades, that status itself is under threat. Now it is not very clear who will kind of dethrone US, but right now US is no longer looking like a leader. Second is government debts have become unserviceable except China, which has a trade surplus, of course. Be it US, be it India, no one is able to serve the debt. And this problem has been compounded by unprecedented currency printing, and I've talked about it in many videos in the past. And note that some of the top leaders in the world right now who are calling the shots, they have nothing to lose. Think about Mr. Joe Biden. If you remember last few public appearances, do you think it matters to him whether the US debt when he left the president seat that was 30 trillion, 40 trillion, 80 trillion or 200 trillion? I don't think it matters to him. One more phenomena is that renewable energy, especially the solar part, is becoming a real threat to oil economy. Oil has powered many governments, many decisions. It has actually ruled the world indirectly for many decades, and that status is under threat. That is, if you see, one of the initial orders of Mr. Trump was to cancel all major expenditure on renewables. Many businesses have become too big to fail. It can be Apple, Microsoft, Google, Meta, even cryptocurrency like Bitcoin. Too big to fail, even one of them fails, and it's a planet level failure. The world can't afford any of them to go down. Last not the least, pandemic has shaken the core beliefs of people. You only live once. People are taking unprecedented loans, not caring how they will pay it back. They don't know how long they are gonna live, but they want to live a king's life till the time they are alive, not knowing what is in store for us, maybe assuming that government will take care of the debt. It's not gonna happen. People will go bankrupt, and a lot of them. So governments are unpredictable, regulators are even more unpredictable. While Mr. Trump is trying hard to convince the Fed chair to lower interest rates, he said, "No, I don't think there is a need right now, let's wait more." Now, this really makes Mr. Trump very angry right now. Certain sectors are favored, and these favors keep on changing. It may be defense at time, it may be railways. If there is election, it could be spending on Bihar, which we saw in the budgets. Certain companies are favored. This also is a phenomena which happens across the globe. Right now, Mr. Trump, for example, will do anything to promote Tesla and Starlink. He even drives a Tesla in the White House to promote it. And retail middle class are the tax cow, which is again global. It is not just India. Everywhere, retail and middle class is the minority in terms of their interests being considered, and they are the tax cow for all governments. Asset versus liability. No, I'm not gonna talk about why we should buy assets and we should avoid liabilities. I'm a big fan of liabilities. I'm a big fan of consumption. What I'm gonna talk about is the timing part. There is a video on YouTube which is my first YouTube appearance. This video now has 2 million views. If you have not seen it, do watch it. In this video, I've talked about my mistiming with a property that I bought in Pune. The question marks I have is on the timing of a real estate purchase. Right now, real estate is really expensive, probably at the highest point ever in most cities. So, is this a good time to buy real estate? Now, if you already bought it, don't sell it. Same with vehicles. If you need it, you need it. For a discretionary second vehicle or an upgrade, is this a good time? Or you would rather want to put that money in the stock market when they are tanking right now, if you have a long term vision of say 5 years, 10 years, 15 years. And while I say prepayment of loans is a bad thing in general, I just prepaid a part of my home loan. Now, why am I saying something which I am myself not doing? Because I prepaid a very small fraction of my overall portfolio. If this prepayment of loan is going to rob you of an opportunity to invest in stock markets, then it is not a great thing to do right now. Similarly, jewelry. Right now, again, if it is a small ticket item, no problem. But if it is a major, bigger item, which will again stop you from investing in stock market, which means you will say that I don't have cash, then not great at timing. These are examples, take it with a pinch of salt. One very important part of being in the stock markets or any sort of investment market is what is your objective of being here. For example, one of your objective could be growth. I have certain money, I want to grow it, and I want to grow it at a decent pace, which means that I want to have a large corpus using which I can retire and I can live off what I achieve at the end of it for my remaining life, my family. It could be income, which is passive cash flow. Once you retire, you will obviously need cash flow to sustain. Your objective could be probably just to fight inflation. Look, I have decent money, I just want my money to fight inflation. It will never end. The strategies are totally different whether you want to go for growth, passive income, or inflation, including instruments. The instruments are drastically different. For example, for fighting inflation, good old FD is good enough. Reasonable returns, especially if you are a senior citizen or about to get become one, or maybe if your income is not highly taxable and you don't have a big burn, then FDs can fight inflation reasonably. You are not going to increase the corpus. And the objective definitely cannot be saving taxes or not paying taxes, zero taxes. Last 10 days, I have seen enough people who did not book profits when the market was improving a bit towards the end of March. They said, if I book profits now, I'll have to pay taxes. They didn't want to pay taxes. And now, in this crash, that entire profit has got wiped out. Give the government taxes. In fact, I would love to give taxes or 10 crores of taxes to the government every year. I won't mind that at all. One very important part of my philosophy right now, and I've been trying to practice this for at least 2 3 years now. Do we know all the chess pieces? If you have been a chess player, do you just play with the rook or do you just play with the queen? That's not possible. In a game of chess, you need to know all the pieces. And there are at least 7 8 varieties, and all of them move differently. They have their own characteristics. Now, your strength could be a rook, and mine could be a horse. That's a totally separate thing. The first piece I'll talk about right now is equity, and equity could be listed stocks, it could be mutual funds, it could be ETF, it could be also unlisted stocks, and I've talked about some of the unlisted stocks in which I have dealt in the past. One of my best investments till now, right now, Tata Capital has gotten not to go for the listing now, so I hope that I'll make some money there. So ESOPs for unlisted companies, that is also equity. Most of us deal with listed stocks directly or via mutual funds and ETFs. Next category is bonds. It is not very popular in India till now. It is very very popular in US. In fact, in US this is called fixed income, and there are big funds which just do fixed income. India also it is there, but very limited. India most funds focus on equity. Now, in bonds, we could have tax saving bonds. For example, long term capital gains. If you have sold a property, you might want to buy some tax saving bonds, say from REC, PFC, and save some taxes. It could be government bonds. For example, sovereign gold bond was a government bond. It was strategic in some ways. Government wanted to import less gold. There could be municipal bonds. For example, when Andhra Pradesh was created, Andhra Pradesh government created some municipal bonds because they needed money to invest in the state. There could be PSU bonds. For example, NHAI, if they want to build some highways, they release their bonds, they raise money from the markets. Corporate bonds, there could be companies which want to take money from the markets. For example, Bajaj Finance, Shriram Finance Company, they have bonds. They give out 9-10% coupon and raise money. They can't keep the interest rate comparable with FD. This is not a bank, for example. This is an NBFC. Bonds give anywhere between about 8% to 12% interest rate. Tax saving bonds could be even lesser because there is no tax element on it. The next category is FDs. This word has been ridiculed a lot, especially on social media. I love fixed deposits. In fact, few days back only, I moved significant part of my money to fixed deposits. Now, am I scared of the stock markets? Absolutely not. Just that I don't know how long this particular downturn will last. And I don't want major money to be available in my bank account because I'll end up with a temptation and I will definitely invest in the market because there's money available. It can be best option in some cases. For example, for senior citizens, they can't afford the anxiety of a stock market, especially the way stock markets have been right now. Maybe if they have a good enough corpus size, then they just live on FD interest income. Not a bad choice. In fact, most senior citizens in India, middle class, they survive on FD returns only. I use FDs as a strategic investment. For example, the latest FDs I have done, just like my older FDs, I have taken an overdraft on it. What that means is if next week stock markets crash 20% more and I like some stocks, I hope that markets don't crash 20%. But if they do, then I'll be happy because I'll take a borrowing from the FD as an OD, which is FD plus 1% in my case. I'll pay 8.25% or 1% more than my FD per annum. That's a cheap borrowing for me. I'll probably end up making 20-25% if the market really cracks over a year. I'll just pay 1% extra on my FD to make that borrowing. Yes, technically 8.25%, but hopefully I'll make a lot more from that. And I'll not have my corpus sitting in my bank account earning 2.5-3%. There is a full-fledged video on this topic on my channel. If you have not seen it, do watch it. I'll leave a link in the end. Next instrument is gold. You can invest in gold via ETFs, sovereign gold bonds. That scheme is dying, but there are bonds available till 2032. Digital I personally don't like because there is a GST element in here. At least in case of jewelry, you are paying GST, but you can wear it. You can't wear digital gold. And then of course, if you have a short-term horizon, you could do futures also in gold. There are at least three varieties of gold over multiple months as series. Now note that gold, if you see Gold Bees, which is an ETF from Nippon, this has given fantastic returns since 2019, which is about a 5-year period. And in the last 2 days, 3 days also, in the crash, gold has not corrected much. Gold is an excellent hedge against uncertainty in general. And if you have followed my channel, you might have noted in the past that for last 1.5 years, I've been steadily moving money out to SGBs and ETFs because I knew this crash was coming. I didn't want to be 100% invested when the crash arrived. Next is silver. I actually did not used to invest a lot in silver. I started recently. I actually invested a lot of money in silver just before the crash 2 days back. Right now, most of my ETFs are down at least 10 to 15%. You can invest in silver via ETFs. Physical is also there, but I don't prefer that because there's a GST element and a security element involved. And if you have a short-term horizon, 1 month, 2 month, 3 month, then you could also do futures, including for trading purposes. Now, silver returns have not been as good as gold, but off late the returns have started going up. It's an industrial commodity. Now, why am I invested in silver right now? With the sanctions that the Mr. Trump has put right now, the biggest ones are on Mexico and China, which has the largest silver reserves. US does not own silver. Where will US get silver from? Other countries. I expect silver prices to go up as a result. Yes, other countries could try and source from Mexico and China and then sell to US, but US will obviously not like it and they'll put further sanctions or restrictions on this trade. For now, I think after the current chaos is over, silver will go up at least 20-30% from wherever it stabilizes. This is my theory. Let's see if it pans out. This is something I've added recently in my arsenal. You as retail can trade in crude oil and natural gas. Yes, it's not just ONGC, oil, Indian Oil who can buy crude oil. You can buy the futures of crude oil and natural gas. You can also buy the futures for say silver and gold. I started recently, in fact, couple of days back, I bought some futures for silver. Right now I'm in a terrible loss. That is because I forgot to sell this long position before the crash. I'm talking about Friday. So while there's a good booked profit also on the short side, I took a long position which I forgot to close. Went into a meeting and by the time I came back, it was a 60,000 loss in just 1.5 hours. So yes, trading in futures in crude oil, natural gas or any commodity is dangerous if you go out of control or if you have too many lots and no stop loss. So it is dangerous, not advisable unless you have the risk appetite or the training to manage. But yes, as retail, you can do it. This particular software is Motilal Oswal's trading software. I use that for commodity trades. It works well and this is not a sponsored content at all. But yes, if you are looking at crude oil, Brent for example, crashing to 65 and you have a theory it will go up or down from here, you could try and take advantage from that. That's an arsenal which is missing in most portfolios. All you need to do is get commodities trades enabled in your demat account. It is available with most demat accounts, most providers. Same with natural gas. And in fact, if you actually observe, MCX is open till about 11:30 in the night, right now after daylight saving changes. If natural gas is being traded, then the volumes internationally also die down immediately after 11:30 when India stops trading. One advantage of future, and I'll talk about it a little later also, is you can buy and go long and then sell it later at a higher price, or you could sell initially if say markets are cracking and buy later and settle the trade. That's one advantage of all futures. This is very useful in falling markets because most retail who buy and sell, they are not able to make money at all in falling markets. One more option right now, which is legal India. Most people don't understand the taxation. I also don't do it. I'm thinking of starting a bit just to understand is Coin-DCX is one example. Again, this is not sponsored. Is to trade crypto legally in India and pay whatever taxes are there, whatever the tax lady has decided. You pay the money and you still get to trade in crypto. You could trade or invest. Both are possible. And again, you could sell and buy or you could buy and sell. Both are possible. You could do leverage trade also. Say 1 is to 5, 1 is to 10. Totally possible if you understand what you're doing. Again, very high risk and very, very high gains also if you are on the right side. And here I'm not encouraging at all trading into natural gas, crypto, etc. This is awareness that in volatile markets there are many, many instruments available. You need to be aware and you need to understand how prices move in those directions. PF, PPF, gratuity, annuity, I used to love them and I don't put any money in these instruments, including other schemes meant for emotional things, sensitive needs like say your kids' education, girl education and so on. These are typically tax free in many cases. The idea is that the government uses these schemes for long-term borrowings. In the name of tax-free, you get very minuscule returns, 7-8%. If you have a 10-15 year horizon, 20-year horizon, 10-year horizon, most stock markets don't stay down that much. You will make a lot more money in the longer run if you have a decent risk appetite and a long-term horizons. That is why I don't invest into any of these schemes any longer. One more problem, for example, in my case, my father expired 5 years back. My mother does not have any income. Her PPF account can't be closed though the earning member is gone. She has to maintain it for 15 years. The government does not understand this part. They have not provided a provision here. If the earning member is gone, you can't invest in PPF. So my mother just puts 500 rupees a year. What's the point? She can borrow a part of the money from PPF, the existing holding, but she can't close it and consume the money. A lot of these schemes also come with life insurance, which also does not make any sense to me. Life insurance is compulsory and it is compulsory for the earning member of the family, not for all the members, not for your kids, not for your not working spouse. Also, most people don't understand the time value part of the investment. I'll give you an example. One of my friends and colleagues recently asked me my opinion on a scheme which was asking for 3 lakh investment for 7 years, which means you give a principal of 21 lakh over 7 years. There was a life assured for I think 25-30 lakh and there was a 30 lakh guaranteed payback after 26 years. Now there are multiple aspects of it. For example, a 30 lakh corpus 26 years hence 30 lakh worth today will have a value of only 8 lakh after 26 years if we just assume inflation to be 5%. You have already invested 21 lakh from your pocket in the first 6-7 years. Now if you are investing in a SIP mode for initial 7 years and this just grows by 10%, what will you end up with? Nearly 2 crore rupees. Yes, this is taxable. You still left with 1.8 crores. Insurance, some people put it in their investment column. It's fine if you want to do it. That's because a lot of instruments have been invented where you get some money back. That's basically investment plus life assured. I personally don't like them. I want to totally disassociate investment from life insurance. Life insurance for me is risk management. If the earning member dies, then the remaining family needs to sustain for a certain period. For example, till the time your kids graduate and they start standing on their own. They need money and support till that time. That is the risk management part. So I would never club them. I would keep them separate and I would not put insurance in the investment column at all. Take a good term insurance which covers accidental death as an extra cover. That's the most common reason for dying at an early stage. And you take health insurance for the entire family and yourself, even outside your office health cover. These two are good enough for risk management. Take a decent amount with it covered and put investments into investments only. One very important part is what is the philosophy with which you are investing. Most retail can't see blood. Most retail does not want to hear the word loss, and most retail can't utter the word risk. Very important to understand in this philosophy, when you make an investment or when you put market or deploy money on any instrument, are you trading or are you investing? For example, if you are buying say crude oil or natural gas or maybe silver gold, you could be trading or you could be investing in gold, silver, you could be trading or investing both. If you are buying natural gas, you are definitely trading. It is very hard to invest in natural gas because the future are for few months only. Trading and investments are totally different games. The tools also are different. For example, you might have seen my software. I was trying to use it for both. Recently, I have taken a commercial version of TradingView. TradingView is a fantastic software. It is different from what I am building. Both softwares have their own strengths. Now I use both. Quality of my trades have improved significantly since I have started using TradingView. Now, can I build that in my software? Very hard, because I don't have access to that much data and feeds in real time. When you trade and invest, your goals are different. For example, when I was trading, initially my goals were around 10% when I was doing swing trading. Then I reduced that to 5% because 10% was very hard to achieve. Off late, I'm just doing 3-4%. If I get that much money, I just book profits and come out. That actually helping me book profits more often and making 3% more often than I would do 5% in terms of frequency. 10% I was hardly making any time because markets would change direction. I would actually end up with losses most of the time. So trading has helped me get more profits off the table in general. Am I trying to say trading is better than investment? Definitely not. Timing is important, skills are very important, and investment horizon is very important. But you can't have a failed trade become an investment, which is the case with most of us right now. You might recover money in the end. For example, a lot of my friends who invest in Tata Motors, they are in 50% losses and they have said now we are not trading, we are now have become investor in Tata Motors. Will they recover the money in 2-3 years, 1 year, 6 months? Maybe yes. Is that a good investment right now with trade wars going on? I don't think so. Because today Tata Motors has said that we will not sell JLR in US for now till the trade war ends or till we have a clear picture. China in any case is promoting BIDE. These two are the biggest markets. Europe right now is already handling a recessionary condition for many years. Where will JLR sell? See this particular stock with SEBI restrictions. I have not put the name and the latest stock prices. It's an FMCG stock, one of the oldest in India. Does it look like an investment chart? Definitely yes. Has that fallen a lot? Definitely yes. Right now, most people will not buy it because it's in the red zone. By my definition, the red zone. It will probably over time go up only. The company has invested 800 crores in a plant recently in one new state. They are one of the best in the world. Is it a good investment? Yes. Is it a good trade? Yes. Now, if you look at Nifty, in last 7 to 8 months, Nifty has done nothing. If you are investing in Nifty-based mutual funds or ETFs, you probably have made zero gains right now, or maybe negative gains, especially if you are investing in this peak. What's the point? If you are not trading and just investing, yes, in next 2-3 years, 4 years, you will make money. Markets will eventually go up only. That is because of inflation, currency printing, and all that will play a role. And obviously, companies will become more profitable also. So this graph is eventually going to be up only. But is there any point in right now blocking money here when you could have switched to a different asset class? There are times when we can't see markets going up and down. Right now, we could clearly all see that markets are gonna tank and come down for at least last 2-3 months. Coming to the very important part, buy or sell. This is the crux of my latest learnings in last 2 months, where I have tried to buy or sell based upon market mood and the mood of the asset class or the stock or the commodity. Earlier, I was just buying and selling later on. So that was not working out when markets were in the adverse direction. Let's just take an example of Nasdaq. It has been cracking 6-7% every day for last 2-3 days. Is there any point in going long right now? Yes, you could be have a contract and say, "Oh, how much it will fall more. So let me buy now, it will eventually go up." You could do that. Or you could trade downward. For example, SGX Nifty is saying that Nifty will open 2.5% down on Monday right now at the time of shooting this video. May happen, may not happen. May sustain, may not sustain. But do you see any point in a long position in Nifty on Monday morning? I don't see it because it may tank 4-5% also, because US markets have tanked 6% on Friday. If you can sell and buy, then maybe it is more profitable to sell when markets are down 1-1.5% and buy when there is a 1% 2% profit involved. This is not a trading recommendation, by the way. This is an example. If Nasdaq has fallen, there is no way Indian IT will move positive on Monday, at least in the beginning of the day. So selling and buying may be more profitable. Most people are not able to think that way. They think buy and then sell. So most people will take a long position Monday morning in their favorite stocks and sectors and then wait for markets to recover. That may not happen for months also. You'll get stuck with the capital. So what's the difference? In buy, you take a position and then you square off that position or take a delivery and sell it later on with some profit expectation, which means sell at a higher price. But in sell and buy, you could sell at market rate, which is already down say 4-5% for the day, and expect to buy at a lower price later on. or at the same price, say after a time. Meanwhile, utilize the money somewhere else. Now, while selling, you could be selling an existing holding. For example, you might be holding, say, 100 shares of HDFC Bank. You sell them now and you buy them later on. You could also do an intraday. So you sell in advance and you square off that position by 315. If you don't square off by 315, then the market will square off at market rate. You might incur a good size loss. It requires margin, by the way, which means that if the prices go in the unfavorable direction, you have to supply the margin, else your position will be squared off by the exchange. You could do a futures. It could be in this month series, next month series, whatever series are available. Typically, next 2-3 months are available. Liquidity is usually low in future series. You could also do options, which means you could sell a call, you could buy a put, or you could create a strategy. This is something I have tried. It has not worked for me. People who are expert make enormous amount of money in this, especially for very short term positions which last say few hours, or long term sales which could be months and maybe even 6 months. It requires a lot more knowledge and practice, which I don't have. Note that reason for selling and buying could be strategic. For example, I expect this commodity or stock or sector or market to be down today, or it could be for leverage. Leverage means I for sure have a very strong feeling that markets will be down only. Let me try a leverage of 1 is to 5, which means for 1% move in market, my profit and loss will be 5%. That's something which happens in futures and options all the time. Be very careful with that because your losses also compound in the same manner. You might say that market has fallen 1%, but my portfolio is down 5-10%, or I have lost the entire capital. Totally possible. That is why you have heard SEBI say all the time that FNO traders lose a lot of money because it is a leverage trade and people don't know how to manage leverage. At this juncture, a lot of retail people are at the juncture of quitting if they have not quit already. 50% retail, just 50% is just a number. If you give them their investment amount back today, they will happily quit and move to FDs or some other alternate classes, at least for the time. They need help. They need help to understand and make money. This video is aimed at least educating that don't just think of buying stocks and selling them at a higher price later on. Indian stock markets and global stock markets provide you a lot of other options, not just stock markets, commodity markets provide you a lot of options. It is not very hard. You need to learn, do practice paper trades first, or work with a registered investment advisor, registered traders. Don't take tip based things. What is my personal philosophy right now? You already, if you have seen my videos, I've already moved a significant money to gold and silver. I have booked profit in gold, by the way, recently, and I'll get back to gold very soon. I have significant money in bonds. Today, I have probably more money in bonds than equity. I have moved a lot of money to FDs. I have taken ODs on FDs. So I am net slightly in loss only in this approach, but again, I am learning to sell and buy. You have already seen in my previous videos, I use a sector first approach. For example, oil sector is cracking right now. I will probably enter that sector very soon with oil marketing companies because I expect Brent to be down for some time. So a sector first approach is gonna be helpful. Am I going to get into IT? Absolutely not. Not right now. Till there is clarity on sanctions. Yes, I could not make money in IT, that's fine. I am following government's priorities, what government want to spend on. For example, with China threat, India government will probably spend on defense, railway spending is happening. I already have some investments there. I have not sold those equities. And I'm avoiding going against the forces. If markets have fallen 3 days, then take a long position. No, let markets start going up. I won't go against the forces. I'll go with the market trend for some time. Silver, the loss I just showed, the example trade, that was because I went against the market. Silver was falling like 9 pins. After I sold, silver fell another 4-5%. That is why the loss was high. Don't go against the market forces. Don't go by stuff like RSI and all. It is helpful, useful, but that does not mean market will definitely reverse only. That is not going to happen. It is gonna be a tough ride. It could last months and maybe years also. I am prepared for a 4 to 5 year grind also, where markets go sideways. That does not mean markets are not going anywhere. They will go up and down, but overall nowhere. Just like the Nifty chart I showed a couple of slides back. And by the way, this is a big opportunity if you have 10, 20 years ahead of you, which means you are getting a lifetime opportunity to invest low in stocks before a next boom happens. Last time the pandemic burst was just 1 month or so. Ukraine was 1 week. There was not a big window to invest. If you get a big window, it's a blessing in disguise for long term investors. Take informed decisions, consult an RIA if you need to, trade with caution. Don't go for tips, learn to trade, learn to invest. Thanks for watching, and I'll see you next time.